Hello and welcome to Follow the Money. I'm Robert Tan. Join us as we explore the tools and insights you need to jumpstart your financial journey. Today we're talking about investor confidence, how global players see the Philippines amid uncertainty, and what that means for our economy. From new U.S. tariffs to climate risks and infrastructure, we'll ask the tough questions that impact both business and ordinary Filipinos. And joining us today is Cristina Ulang, Head of Research at First Metro Investment Corporation. Good afternoon, Cristina. Welcome to the show.
Hello, good afternoon. Sir Robert, good afternoon. Nice to be back.
I know. Welcome back. Now, Cristina, let's start with this. Now, with all the uncertainties happening right now in the issues surrounding our country, how do global investors really view the Philippines now in today's uncertain climate?
We are admittedly small in the eyes of the foreign investors. That's a disadvantage. But in terms of the structure of the economy, we are a relative winner. You know why? Because we're very much domestic focused. We're consumer driven. We have our own internal drivers, which shields our economy from the turmoil outside, driven by Trump's shock. Trump tariff shock. Because our exports, how much is our consumption expenditure, personal consumption? It's 77% of the economy. And how much is our exports to the US? Just like 3%, 2.8% of GDP, like 13 billion US dollars. So small. That shields us, specifically the corporate earnings of the PSA 30 companies is shielded from all of the turbulence, the global policy uncertainties, which is wreaking havoc on the other more export-driven companies of the other economies, like Taiwan, Korea. These are very export-driven, China and India. Unlike us, we're very much internally driven. I think that makes us a relative winner compared to the other countries. That's one advantage that we have.
Now, with the new U.S. tariffs, which Philippine industries do you think face the most pressure and which might adapt best in this situation?
Of course, we are a top exporter of semiconductors, electronics, and we are part of the very important global value chain with respect to this. The positive thing about us is that we're very much allied with the U.S. And you know, the U.S. is very much promoting its chip industries. It wants to be ahead of China. And I just pray that we're able to get zero tariff on our semiconductor, our electronics exports to the U.S. so that we're able to benefit from this chip acts of the U.S., which is promoting a legislation that promotes U.S. Technological advancement. So I am hoping that the government is able to negotiate something that is really very competitive with regard to the semiconductor tariffs, electronic tariffs. I think that sector of ours is going to benefit from all of this digitization and this move towards to improve the overall global digital infrastructure. Of course, aside from that, Philippine manufacturers of food and beverage also are in a strong position to benefit from the domestic-driven economy, those that don't export.
Now, do you see the Philippines sliding back into being mainly a supplier of raw materials?
I think our manufacturers have done their share of involvement in the supply chain, like our food processors. They're actually exporting canned foods and foods that have been processed in order to cater to certain markets abroad. We are not a pure exporter of all of these raw materials. I think we have done a share of processing in terms of the food exports that we do. And of course, our mining industry also is into this HPAL, processing of nickel, and our BPO also is going into higher value-added services. So we're not just this low value, cheap exporter of raw materials. I think we are moving upward in terms of the supply chain, global value-added supply chain.
Now, having said that, how do you think our competitive advantage right now is in terms of our neighbors?
I think we were rated number 2 in terms of this UN global survey when it comes to digital infrastructure and sustainability moves. I think that is one achievement that we have. And of course, in terms of moving towards becoming more competitive, we have all of this infrastructure around us being developed. Our airports are being expanded, the capacity, and our tollways, and of course, the digital infrastructure and renewable energy infrastructure. We have Terra Solar, the largest in Asia, to rise and to be completed 2027. Bulacan Airport is going to be there. The metro subway is being developed also. And how many more kilometers of roads and tollways will San Miguel build? It's going to go to Bicol as long as the the route going to the south. I think we are doing a lot of infrastructure. It's just that of course we have met some challenges when it
Yeah.
comes to this disbursement, because
Yeah.
the recent election, was kind of it banned this disbursement. That's why in the first half we're a bit flattish, but going forward we are achieving like 5% of GDP as part of our infrastructure commitment, government
But
spending.
again, talking about infrastructure, now one of the biggest issues right now are floods, which causes billions in losses yearly. Now, how does this affect business confidence and growth?
Well, climate, these are climate events, all related to climate events, and these are disturbances very disruptive to the economic growth of the country. But I think we are moving in the direction where we are trying to address all of this. And in terms of the government procurement for flood control infrastructure, I think we are currently transitioning towards a better one, towards one that is more efficient in terms of allocation of capital, one that is more transparent and accountable. I think we're moving in that direction, and there is a silver lining. We are seeing our lessons now, and I think we are going to be improving towards the improved side of a government infra procurement.
But currently, when you're talking about flood control projects, infrastructures like that, and what's happening right now with hearings about alleged corruption in these projects, and in your observation, how do the foreign investors look now in terms of the business climate here in the Philippines? Is it still a wait and see?
Mhm. I think the concern would be about the growth prospects, because we know that government needs to spend in order to complement the rate cutting of the BSP. So we are expecting stimulus coming from the policy rate cutting of the BSP and aggressive fiscal spending on the part of government. So if you have this greater oversight over this flood control related spending, it is now going to be monitored closely, and the bidding I heard for public investments, infrastructure, are now suspended. So it seems that the foreign investors are going to be thinking, will the growth outlook be affected by all of this greater oversight of public investments? Will the fiscal driver be as strong as expected? We are expecting like 6.7 trillion worth of government spending next year. That's going to be very impactful in terms of reaching the 6% GDP growth. So given all of this greater oversight, as I have said, then the question is, are we going to be hitting? Are we going to be hitting more than the 6% if spending is going to be a bit slower, or will we be able to hurdle and all of this negative news will blow over, and then come up with a plan B, so that we're able to efficiently disburse and then still hit 6% GDP growth? I think that's the main question now.
Now, Christina, in your research or observations, do you think our government's infrastructure drive lived up to the promise of making the country more competitive?
Well, competitiveness can be measured in several ways. In terms of the infrastructure, bridges, airports, we're still moving in the direction where we have to see the fruits of our very long gestating infrastructure. We have seen the launching of it as far as the time of President Duterte. It's still undergoing construction. It's really long gestating, and therefore it is going to be bearing fruit, I think, maybe after 2028, because most of the projects now are still ongoing and there are still under feasibility studies and then subject to approval, but more greater number you can see from the list of our top 129 infra projects, that most of them is going to be started and come online significantly after 2028. So this is a long-term thing, I think. But the fact that we're doing everything now to improve the infrastructure, I think that's one very good signal on the part of to the investors. Because right now, for instance, there are big capex expenditures. If you're going to look at the capex expenditure budgets of the top corporation in the country, PISA, for instance, our computations show that the growth of capex spending this year is going to be like 14% at the minimum. And that shows the confidence of the private sector in terms of complementing what the government is doing. So there is that confidence that all of this infrastructure improvement will happen, and the private sector is riding on that expectation.
Now, Christina, we talk about growth, we talk about a lot of data saying that we have a stable economy, but why is there often a gap between official economic stability numbers and what ordinary Filipinos on the ground really feel?
Because the metrics, like for instance inflation, we're hearing the inflation rate is very low, like 0.9% for January. But actually what it means is that prices have gone up very slowly. They have decelerated from the very strong increases of 8.7%, 7% previously. So the Filipino masses are feeling the weight of the cumulative increase in food and beverage, and in the staple food, and in the day-to-day needs that they need to spend for. There is that high, still feeling of high cumulative increases in the prices. Although the inflation print is like 0.9%, it's very, very low. But it's good news that the rice prices have really gone into negative territory. So it's really disinflation happening in rice. I think that's one bright spot. If we're able to continue with that low price for rice, which is a big staple food for the Filipinos, then we can see an improvement really in terms of the well-being, financial well-being. And then the other factor is really the cost of credit is still very high.
Very high,
The cost of credit is not going down as fast, because it's also influenced by what's happening abroad. We're seeing the US Treasuries in the US, like the 30-year, go up. And it's keeping our long-term cost of borrowing high. Like our 10-year is 6%. Well, so how do you finance the acquisition of a small house with a 6% interest rate, whereas in the US it's much cheaper
Yes.
before. But now they're also faced with 5% 30-year mortgage rate. So there is this combination of high credit costs and then cumulative increases in the prices of staple commodities. And
But usually these are the kinds of data that the ordinary working class really don't see when they see that we say the economy is growing, inflation is like this and that, but they don't really feel it. But before you answer that, Cristina, we'll just take a short break. Follow the money. We'll be right back. Welcome back to Follow the Money. Still with us is Cristina Ulang, Head of Research at First Metro Investment Corporation. Now, Cristina, we're talking about the working class, the ordinary Filipinos. How can we better explain to the general public the economic and status of the Philippines and how it can actually help them, let's say, invest their money, increase their wealth?
These are uncertain times. The question is, are you aware of what's happening around you? And if so, are you also trying to maintain a financial discipline? with regard to your spending, or are you spending like you have a golden credit card? Do you gamble? Do you have vices? And are you living beyond your means? Do you try to develop the habit of savings, and
Yeah.
then trying to achieve some financial literacy so that you're able to invest your money? I think these are the questions that a person should be asking oneself in order to like uh, move up the ladder in terms of personal improvement, and also financial knowledge, financial literacy, so you're able to improve your lot in terms of your financial capacity.
Mhm. Yes, because at times when we look at this data and they see it and they say, oh, the economy is growing, but they don't actually feel it. So, do you think there's really a lack of awareness, financial literacy that both the government, even the private sector can help in terms of creating awareness more so that people know how to invest their money instead of just spending it every day?
Mhm. Well, it's also nice to spend the money, no, but you
Yes.
shouldn't really, you should not really go
Uh-huh.
overboard.
Mhm.
It's nice to have something for a rainy day, and then grow it so that you're able to. But to do that, you should be able to watch this program also. Watch Bilyonaryo investment related program, and then attend all of these financial literacy uh,
Mhm.
forum
Mhm.
and fora, and also try to experiment with your investments in the stock market, seek advice, and then also in the fixed income market, seek advice, and then go to your relationship manager, your account officer, so you're able to have access to this uh, investment opportunities, because we now have a lot of market channels, like your GCash,
Mhm.
you have your digital channels to be able to invest in the stock market, and
Mhm.
all of the social media conversation on how to do it. I think we have the internet as our tool, in order to be able to know what's happening. And I think the Philippine stock market, the PSE management
Mhm.
is doing the right thing in terms of lowering the stock transaction cost from point 0.6 to point 0.1. That's the stock transaction tax. So it's low now. You can now get more than in terms of the profits. And then also the REIT law is going to be refined to include more qualified assets. And that is also a step in the right direction in terms of creating more products available to the market for investors, especially the retail ones.
Yes.
In China and India, the retail investors are the movers of the market. They account for about 40 to 80%. I think we should be aiming for greater participation on the part of retail
Yes.
investors on top of the institution.
I guess
Of course,
it's really good to hear that there are a lot of channels that a lot of us can go into in terms of investing our money. But do you think we still lack creating awareness? Because as you said, there's so many channels that we can go to, but I don't think many are still aware of these channels that they
Mhm,
can actually invest. Because some
mhm,
channels it's just really used for spending, not really saving or
mhm.
investing.
Mm. I think there are corporations already going to schools and campuses doing their own share of financial education program, like GCash, for instance. It's an e-wallet that is now trying to promote investments to the youth, to those who are still in school. So it's good that it's starting early. It's cultivating an attitude and an awareness on the part of the young people, because we have the demographics, like to be able to tap into these retail investors, and then be able to offer them alternative instruments, new products. And but the question is our school curriculum very much receptive to this? Are But it's nice to hear that corporations are doing their own share in
Mhm.
terms of this social commitment, this part of their CSR.
Mhm.
Yeah, corporate social responsibility. I think that should be the umbrella where most corporations should do their own financial literacy. But in First Metro, we are very active doing
That's
all
good
of
to
these
know.
fora. First Metro Securities. And I think all the stockbrokers are conducting their own financial literacy program. So it's really up to the investors to really reach out, participate, and develop the habit of being constantly aware, getting
Yeah.
involved in the conversation.
Now, since we're talking about investments, do you think we're drawing in more long-term investments or mostly short-term money that can leave anytime?
Mhm. Well, the sad truth is that for this year, we saw a 25% decline in the foreign direct investment. But in terms of the commitment in the PESA zone, there's a 77% increase in
Mm.
terms of the investment pledges there. And the government of the US is also has already said that they're committing some 21 billion US dollars to a Subic Bay industrial military hub. And I think several companies have also aired support for our investments in healthcare, in semiconductor, in mining, not only from the US but also from Australia, this Makilala Mining, and then the Maharlika Fund. I think the Maharlika Fund is going to be a big vehicle for the private equity funds to enter the country, like this investment in NGCP, another investment in renewable energy, and another one, I think, in transmission, electricity transmission. So I think we have all the available institutions.
But are we
It's
feeling the
just that
effects now, or is that going to take some time still?
uh, I think it's going to be like having the drive. It's with the government, really, the initiative on the part of the Maharlika Fund. I think it's going to be on their part. Maybe they're working on something already, hastening it, but we're not too aware of it. It's maybe these are all gestating in terms of all of our efforts. But if you're going to look at the fixed income market, we saw a 700 million US dollar inflow because we were already part of the JP Morgan bond index. It's just that the sentiment really in the equities market saw an outflow,
No.
outflow of about like
Yeah.
800 million over a 12-month period. So the portfolio investment is very weak in the equities market, but very strong in the fixed income market. And in terms of the PESA income, PESA investment is also growing. US commitment to a military industrial hub, 21 billion related investment. So all of these are going to be happening in the next 2 years.
Now, Christina, being focused on research, being the head of research at First Metro, and your observations in our economy and the business sector, if you could push for one urgent reform to restore investor confidence, what would that be?
Mhm. I think it's capital markets development because what we really need is funding. We may have all the big projects that we want, but if we don't have funding coming from inside, if we fail to mobilize internal resources, then we will fail. I think it's very important we develop our capital markets, but and I think the PSE is already on the right path. We have the legislation. Government has this capital markets efficiency program, SEMEPA, which is good in terms of encouraging savings to go into retirement products, retirement fund, and then your lower transaction tax. And I think the participation of foreigners is going to improve if and when we're able to lower further the cost of credit. Like everybody is waiting for the BSP really to deliver on the rate cuts because the real yield is still very high. Our key rate is 5%. Inflation is already at 0.9%. So you have 4% real yield, which is very high. And I think the market is really waiting for that real yield to come down maybe to the neutral rate of 2% to 3%. And that means we're going to have more liquidity, lower cost of money, lower cost of capital. And I think that's going to stir up animal spirits.
Are
And
you
then
optimistic that's going to happen anytime soon?
uh, if and when, and I'm praying, if and when the BSP and the Fed deliver on what the market really wants, which is more rate cuts. And that really depends on inflation. But there are negative news in the US. Of course, Mr. Trump has his own agenda of like firing people in the Fed. and that's creating a lot of uncertainty again, and then causing interest rates, the long end of the
Yes.
US Treasury to rise. It's also affecting our long-term money here. 10 years already at
Yes. Well, we can
6%.
only
So,
hope, no, Christina.
yeah,
Yeah.
yeah, there are a lot of factors really, externally and then
Yes.
internally.
Okay, Christina, you're familiar with this already. We've done this before. Let's go to our rapid fire questions. Just answer yes or no. You don't have to explain your answer. Let's start with this. Do global investors actually know the Philippines exists on their radar? Yes or no?
No.
US tariffs, are they giving our industries a migraine?
Yes.
Or no? Yes. Floods every year, do they make investors sweat bullets? Yes or no?
Yes.
Is managing money in this economy easier said than done? Yes or no?
Yes.
And finally, complete the sentence. Money is the root of all.
Good.
Ah,
Goodness.
I hope. Oh yeah, a lot of goodness. Thank you, Cristina, for your insights, for sharing your insights here at Follow the Money. I hope we can get through this hurdle and get more Filipinos to invest. Thank you.
Sure. Thank you. Thank you too. Bye-bye.
And when it comes to investment, growth, and the future of the Philippine economy, one truth stands out. As John F. Kennedy once said, change is the law of life, and those who look only to the past or present are certain to miss the future. The Philippine economy is shaped not just by numbers, but by confidence, from how global investors sees us to the pressures of tariffs and climate risks. Insights from Cristina Ulang helps us understand the gaps, the challenges, and the reforms needed to attract real, long-term investment. I'm Robert Tan. Stay curious, stay sharp, and always follow the money.